friends, let's talk about this. Nobody's been telling you straight what we're about to cover today. After years in the stock market and in the credit world, I've seen over and over that money always flows from the person who knows to the person who doesn't. 3 months ago, a woman I knew had a credit score of 621. She walked into the bank and heard the interest rate, exactly 7%. On a $350,000 mortgage, that difference means over $180,000 in extra interest over a lifetime. The guy told her, wait a bit, it'll improve, but don't expect a miracle. 93 days later, she came back and her score was 761. The bank officer asked, "Did you enter the wrong social security number?" No, she hadn't. She'd simply learned a mechanism that banks know about, but never explain to anyone. Now let me break this down because the logic is really simple. A big chunk of your credit score, roughly 35%, comes from payment history. 30% comes from utilization. And 15% comes from the age of your accounts, meaning how long you've been using credit. Everyone thinks this is just about time. You have to wait. But here's the thing almost everyone misses. Thanks to something called authorized user status, all your mother has to do is add you as an authorized user on a card she's had spotless for 20 years. That account's entire age, its entire clean history, lands directly on your credit report within 1 or 2 billing cycles. She doesn't even have to hand you a card. I came across a similar case with a 24-year-old whose score was 589. He'd missed a few payments in college. Every dealer was quoting him over 14% on a car loan. His grandfather made him an authorized user on 2 spotless cards dating back to 1987. 60 days later, the kid's score jumped to 697. His rate dropped to 6%. Over a 5-year loan, he kept over $5,000 in his pocket, all from one 10-minute click by his grandfather. But careful, the account you get added to has to be clean. No late payments in its history, low utilization, high limit. Because a bad account makes things worse for you. Second trick. What we call utilization isn't measured on your payment date. It's snapshotted on the card's statement closing date. So even if you pay it off every month, if a high balance shows up right when the statement closes, your score takes the hit. The fix is simple. Pay your balance down close to 0 a week before the statement closes. You can see a 20 to 40 point swing in a single billing cycle. Third, ask for credit limit increases. Most banks do this with a soft pull that doesn't touch your score. When your limit doubles, your utilization automatically drops by half. Your behavior hasn't changed, but the math has. Fourth, never close your oldest account. But if some new store card you don't need is dragging down your average account age, don't be afraid to close it. Fifth, during a mortgage application, there's something called rapid rescoring. If your bank can verify it with documentation, the update gets posted to your report within days instead of waiting for month end. So, if you time your big moves right in the middle of the application, the effect compounds. Of course, don't make mistakes. Don't apply for new cards during this process. Every inquiry knocks off a few points. Inconsistent payment timing wipes out all your effort. Don't get impatient and expect results in a week or two. The system works on a 1 to 2 billing cycle timeline. If your score is below 650, make the authorized user move first. If you're in the 650 to 720 range, fine-tune with limit increases and payment timing. If you're above 720, you're already in good shape. But even going from 750 to 780 can seriously change the rate you get offered. And one last thing, friends. This system was built by the banks, built to measure their own risk, not to get you ahead quickly. Because you staying stuck in the middle for years earns them more interest. I'm not telling you this is some conspiracy theory. I'm showing you how to play faster within the system's own rules. You're not cheating, you're learning the rules. The rest is up to you.